Yeah, guys. So uh, we have the second folk from Futures First, who is here to guide all of you and mentor all of you to get towards algo and retail trading, right? So basically, let me first introduce him. So Harsh was one of my batchmates back in college. So he was into financial markets for more than you could say 4 to 5 years, right? He was mainly into Indian markets and derivatives, that too. And he got into futures first just a while back as an intern, and he recently got his full-time offer as a market analyst over there, right? So Harsh has got a very good, we could say, experience and knowledge in terms of financial markets, right? And after his entry into futures first, you can imagine the kind of experience he's having, right? So yes, Harsh. So let me also introduce these guys to you, right? So
Okay.
most of the people here are aspirants who are looking to get you could say some kind of an offer in the finance and crypto industry, finance trading and crypto industry,
Mhm.
right? So most of these people are from top tier colleges. They are having good background in finance, right? So they are
Mhm.
trading, they are traders, they have been traders, right?
Okay.
And yeah, so you know you can go ahead from here, right? So tell us about yourself, how you got into futures first, right? What was how did you manage to gain the kind of experience that you have right now in terms of Indian markets, in terms of crypto, in terms of whichever markets you are working with right now? Cool. So
Okay.
over
Okay.
to you,
Sure.
Harsh.
Yep. First of all, hello to everyone present here. Myself, Harsh Shukla. So I've been trading the Indian markets for like past 4 to 5 years, 4 years, most probably, yeah, 4 years. And recently in Jan 2024, through college placement, I joined the this org, Future First. So most of you all must be knowing about Future First, right? It's a prop trading firm. How many of you all know about prop trading?
All of us knows actually.
Do anyone know?
Yeah.
Okay, okay. So yeah,
Yeah.
so they all have a background, right, about trading. So I will not bore you with the introduction like how trading works and all. So I'll directly take you through how Future First any prop trading thing works. So basically, uh, okay. So basically, what Future First of all, let me take what the products and all are the that our company trades. So majorly there are two segments. There is the debt bond market that comprises of Brazil, US, and European all exchanges like CME, ICE, if you all know. And apart from that, we trade all major commodities like energy, grains, softs. Yeah. So majorly, what I have been doing is I have been trading the commodities like energy, crude, Brent, natural gas, gas oil, Hogo, yeah, heating oil, वगैरह वगैरह. And in agri, I trade mostly soybean futures, then up soybean, soy oil, wheat, and such other products, right? And these markets are, matlab, we don't directly trade futures like y'all. Most probably, y'all be doing futures or options. How many of you do futures, and how many of y'all do options? Any numbers and any guess, Bishal? Futures, okay.
Yeah, so
One
most of this
futures.
are currently into crypto futures. All right, they can have
Okay,
a
crypto
personal
futures.
background in options too. I think there are some. There are a few.
Okay,
Yeah.
okay, okay, okay. So what our company does is, Future First does is it mostly trades futures. It almost doesn't trade options, and basically there's a reason for it. Uh, our company it consider itself it understands futures far better than it does options, right? In options there are far more complexities, vega, gamma, delta, and all. So our edge is trading the futures. So, and not also futures. So we all generally what we retailers do is we trade outrights. Okay, outrights are like future contracts. Like current month is right, September. So what we all do is we trade October, November, right, indirectly. long these, like if you're trading suppose an NSE stock like Reliance, so you are longing a Reliance stock of SAP or OCT contract, November contract. So what Future First does is it doesn't directly longs or shorts future contract. It probably trades spreads. How many of you all know spreads? Are these the same? First of all, are these the same guy and Deepak's meet?
Yeah, yeah. A few of them are. So
Okay, okay.
yeah. So you
So
guys, do
so
you
they
know
must
about
be
what?
knowing,
Yeah.
they must be knowing about spreads, right?
Deepak did not actually give a lot of insights on that. So
Okay, okay.
it would be great
So
if you could actually explain. Yeah, that would be better.
okay, okay. So what most retailers really do is they long a SAP contract or contract based on price action and some sort of, they're mostly technicals, right? Most of the retailers trade based on technicals and not much on fundamentals. Okay, some of you all do like news based trading, but most of us do technical when we are retailers, right? So what in futures first we almost mm, 10% we only do, 5 to 10% we trade outrights, and most of us trade spreads because spreads are far more beneficial in terms of, first of all, margin, the margin that we get. Second, in terms of liquidity, when you go to the crude or any energy or whatever it is that you're trading, okay, there are some instruments, some products that have a large volume in terms of that product. But when you see the products in like energy, bonds, so the volumes in spreads is literally like in thousand, 100K, 10,000 like this, and for all months, like there is a SAPOC contracts, OCNOV contract, NOVDEC contract. So first of all, let me introduce what a spread is. Basically, what you are doing is, let's say you are longing a SAP contract and you are shorting a OCT contract. Okay, so what it basically does, it you are trading the difference between two futures of the same contract, same product basically. So suppose if you are trading Bitcoin, so you are longing or buying September Bitcoin and shorting October Bitcoin. So what what you are basically doing is, basically you are trading the differences between the contract. So you are not take yeah. So you are not directly taking a call on the
Harsh, I
outright
think there
itself.
is some.
So what's the difference between the two? How? Yeah.
Yeah, Harsh, actually, I think there is some kind of a network issue on your end. So can you just try resolving it? Maybe you can turn off your
Okay, sure.
PTO. That should work, I believe. Yeah,
Okay, okay, okay.
cool.
So yeah, is it working fine now?
Yeah, it is better, much better.
Okay, okay. So yeah, what a spread is actually is, you are basically trading the difference between two contracts like SAP, OCT, OCNOW, and it's far more macro based than the relative volatility that we are usually used to. Like suppose some news comes out and Bitcoin goes up 5, 10%, 15%, God knows how much percent, but w- the spreads, the difference between the two contracts, SAPOC doesn't go that much, right? So in what terms is it better to trade outright or spread? So spread, first of all, spread provide a better margin, okay, than trading on outright itself. Then apart from that, you are basically reducing risk, okay. And the most important thing in an firm like Future First or any prop trading firm or trading firm is they have to improve their risk based reward, okay, reward to risk ratio, sorry. So
Cool.
in the same amount of risk, how can you maximize your reward? That's the point. So that's the reason most of us trade spreads, and we don't remain even constrained to the spreads. We also trade, like, how many of y'all have a math background? Matlab, you all know differentiation. Mm, okay, okay, yeah. So what a spread normally is, Vishal, you're muted.
Yeah, sorry, please.
Hmm. So most of you all must be knowing what a basic differentiation is. It's basically difference between 2 upon divided by whatever you are doing, like dx, right? So you can understand spread is a differentiation between two prices, two outright, two future contract. Okay. Then what we do is we even trade the difference between two spreads. Okay. That forms a fly, d fly. If you all know, most of you all know that from options, right? You know, inverted fly, iron fly. The same thing applies to even future markets when we are trading a future contract of any product or commodity. So same thing happens for these contracts too. We are trading with basically the difference between outrights and then the difference between spreads. So what happens is when you are trading differences, so the volatility significantly reduces. Okay. So the structure that you are end up getting is very range bound. Most of the firms that are trading prop trading are trading the range bound structures, and uh, the range bound structures are actually like 5 to 10 ticks maximum. Okay. 5 to 10 ticks, and we are trying to uh, emphasis on how to get the most out of that 5 to 10 ticks, because we almost have a huge margin with us, so we can place many lots. But what we are trying to do is trade the indifferences, differences between the two prices. So that's how spread trading works. Okay.
Cool, great.
So, hmm.
Yeah,
So now comes the part. Shall I explain the algorithmic part associated with
yeah,
it?
please go ahead. Please go
Okay.
ahead.
So what happens is, okay, all of you all are trading, right? So how many of y'all have a hold on automation or any type of algorithmic thing going with you? Okay. Can I get okay, it's just one. Mm,
Yeah.
okay.
So I
Okay.
believe a lot of people here are actually interested in algo, but they have not done. They don't have any practical experience as such.
Okay.
All right.
Okay. So yeah.
Yeah.
So I guess most of y'all must be based discretionary based traders, right? Or y'all have a proper
Yeah.
design systems on which you trade. Mm, what
Discretionary
I'd
traders, I
recommend
believe.
is, yeah, discretionary, na. So
Right.
what I would say is having a proper system is actually better than being a discretionary trader. In like, you can also be a good discretionary trader. Yeah, so yeah, that is discretionary technicals, price action, SMC. So, but when you are trading a price action, so like when you're trading price action, do you know which pattern or whichever candlestick pattern, chart pattern, breakouts, breakdowns you are trading, how much hit ratio it has? Like, you must have, what I'm saying is you must have a data, like if some sort of thing happens, like this pattern forms, then out of 10 or 100 times, how much time it does this and how much time it does that. Okay. Like, it, of all of you all know there is nothing like 95, 99 hit rate. Okay. In markets, you all should be having a, like, you can work with probability. It's all a game of probability, first of all. Okay. So you have to increase your expectancy. You all understand what expectancy is? It is hit rate into your uh, average. When you win, how much you win. So that's the point. So when you are doing an algorithmic, okay, big time frames, okay, yeah. So yeah, that is also different higher time frame, lower time frame analysis part, right? That also comes under discretionary. But what I am saying is when you form a proper system, like you can do it either. First of all, you have to ideate it, right? You have to ideate it in your mind and then form a system based on your understanding. Because I mean, yeah, there are different systems are all around the world that have a profitable working, but the first part is ideating, then the second part is execution of it. So when you have formed a trading strategy or a system, right? how is a strategy different from a system? First of all, a strategy only involves like what where you have to buy and where you have to book or book your SL, book your profit. Okay, take profit. But a system involves all the major risk associated with it, like risk management, position management, all sort of things. So when you are forming a system, then you know what the outcome of a system is on a longer time, like longer horizon of time span, for maybe 3 months, 4 months. Like you have back tested a long part of data. So what I'm really telling you is to work with data. Okay. So when you work through a lot of data, you actually get to know gist of things, like how actually thing goes. So in major of the firm, all of us take decisions based on data based. Okay. So very few of us do discretionary. Whatever we do is data backed. Like out of 10 times it is supposed to happen 7 times like this and 3 times like that. After that we get the hit ratio, then we go to the risk management part. When we win, how much we win, and when we lose, how much we lose. Okay. After all sort of things, then we have formed a suppose we have formed a profitable trading system which have a positive expectancy. And when you are forming such a system, you all have to also consider the slippages. Okay, slippages, transaction costs, because when you are like, for us as a trading firm, what we are trading, slippages are very important to us. Okay. uh, Most of all, you all must also know about market making, right? What is market making?
Yeah.
If not, you should go
Anyone?
and
Sorry to interrupt. Let me ask this question actually to everyone. Any one of you who can give a brief on market making? Is there anyone? Pratham, Shubham, are you guys there?
Yeah,
You,
yeah, yeah.
yeah, please go ahead.
So hello, Harsh, this is Shubham. So market making basically it's they are the individual who try to manage the buy and sell order of the participants in the market, and they try to make the profit out of the difference that they uh, place. Also, they try to manage the liquidity, and if the liquidity is high or low, depending upon the constraint that is placed. So this is how mainly they manage.
yeah, you are mostly right. So, what are the benefits of it? First of all, when you are making the markets or basically providing liquidity to the markets, what it first does is basically, if you are doing it on a good level, the exchange provides some rebates to you. Okay. So for like if you are doing it on a good level, the exchange provides rebates on your transaction costs and all. And apart from that, if you have a good market making algorithm or strategies, so you are earning almost a good amount from that market making itself, that basically trades the spreads between the bid and asks. Okay. You are basically forming up a ladder on bid and on the asks, and basically you are providing the liquidity to the markets. So that's how market making works. So these are all the frameworks, right, in which a firm can operate. So what Future First does is it also does market making. Like it's a pretty big size firm. Okay. In India, is one of the biggest prop trading firm. Okay, okay, sure. So
Hello, Harsh. I have a just question like during market making, what
yeah.
is your take on the price ladder that we show? Because brokers usually don't show the big price ladder. We mainly get the exposure to +5 or -5 ticks that we have.
Okay, okay, okay,
So
yeah.
at
Hmm.
your firm, how do you have a take on that, and what all inference that you can conclude, and then how you trade? Can you tell something more on this?
Yeah. So, like, suppose the brokers that you are trading in, let's take an example of Indian markets, because I am more, uh, I, I don't have much of a crypto experience, but I have in the Indian markets. So, speaking of
Yeah,
Indian
yeah, Indian.
markets, when you trade in some brokers like Zerodha, Kite, or Grow, they only show you maximum 5 bids or 5 asks, right?
Yeah.
and when you show click on show full depth up to 20 depth, it doesn't show much. Okay, most of that
Hmm.
information is not passed on to you. So uh, when you are making markets of an like equity, so you all know firms like Optiver. Wait,
Yeah, yeah.
let me write it in chat. After this meeting, if you all are more interested in market making and stuffs, you can click on you can search about Optiver, what it does. So it's a basically a good big in a foreign market making firm. And coming to back to your question, so the products we are trading and the products most of the retailers trade are far different from each other. At this point, you must know, like
Yeah,
when you
yeah.
are trading spreads, the ladder doesn't move much. Okay,
Hmm.
there are some spreads that we trade that literally moves one tick a day, and some spreads doesn't even move one tick. So such sort of ladders, uh, you can actually remain on the bid and ask for a long time. Like you have to be in a queue. There is something called queue holders. So you have to remain in queue and provide the liquidity to whoever comes. And like suppose you are trading an oil market like commodity Brent. Suppose taking an example of a Brent crude. So
Hmm.
what happens is who trades spreads, right? If we are trading spreads on our end, like as a firm we are trading spreads, who are the other people who are trading spreads? Mostly retailers don't do that. Okay, retailers don't part.
Basically, priority is given to the person who comes first at a certain price, right? When you
uh,
said about you, is it what you mean, right?
what repeat it again.
I said when you said the like for a certain price, like for 500.10, there
Hmm.
are many people that would have been bidding or making an ask order. So
Yeah,
the priority is given according to the person who comes first and bids first.
yeah, PIQ.
Okay,
Yeah,
so this
in the commodity market is it's like that, but in bond market it's like pro rata based. You know what is pro rata?
sorry, I don't know this word.
So what happens is when you are trading a large amount like 500 lots, 10,000
Hmm.
lots, 10,000 lots, they give a
Hmm.
priority to you instead of someone who is standing ahead of you. Okay, this
Acha,
happens
okay.
in this happens in bond markets majorly.
Okay.
So cause the
But
bond market is one of the most liquid markets. You
hmm.
must know that.
But
Yeah,
also
so
I've observed that when the price ladder, suppose for a certain price, there is a huge amount of order and the
yeah.
price is moving from down to up. So
Hmm,
we commonly believe that if there is such a big sell order at a certain price,
hmm,
then there might be the chart might take some time and then it might when go down or it might go up. So
yeah.
usually believe that if there is a very big order placed at a certain price, that either acts as support or a resistance. But many
Hmm.
times I have seen that whatever from brokers price ladder I've seen that it skips that price and moves very rapidly. Although the buyers don't have such a big amount placed below that price. So how does
Okay,
this happen? Can
so
you
yeah.
tell?
What happens is when you are looking at a market depth, right? On
Yeah.
the ladder, like the amount of bids and the amount of asks there are. So that are passive
Hmm.
orders, right? You know what an
Yeah.
aggressive orders and passive orders are?
Yeah, the market and limit, like.
Yeah. So what happens is, suppose there is an X very large amount of uh, passive orders that is on a price that we all
Hmm.
retailers consider as a like a resistance. Okay. So
Okay.
first of all, you have to understand whenever a big person or a like firm is doing something,
Okay.
it
Hmm.
usually doesn't want to show retailers what they are doing. So whenever
Okay.
you shouldn't believe on a like very big order that is placed on a ladder. Sometimes it might work, but what firms usually do is if they have to execute something of a very big size, they do it on a very like suppose I have to execute 1,000 lots. I won't do it like place it limit order 1,000 on a particular price. What I would
Yeah, you all
instead
place market order.
not even market. Okay, we also think about slippages,
Like
right?
they will choose a price range between which they will order,
True,
like
true,
from
true.
100 to
Yeah,
110, right?
Exactly. You will
yeah.
place
Plus,
that.
This
one
basically
more question, sir.
follows the accumulation and distribution principles, right, Harsh?
Yeah, most
True,
of it.
true. Yeah,
But
yeah.
what it also does
Yeah.
is it places 100 orders. Like suppose they have to. Let's take an example. We have to execute it only on one price. We don't do that mostly. We particularly is pick a range. Okay, like 100 to 105. But what
Mm.
we do is mostly place $100 on it first. Suppose someone hits it on the market, we get filled, right? Then we again place $100 on that price. On this basis, we do like we have execution systems that basically doesn't show 1,000 lots that are there on the ladder, but still we get filled 1,000 lots based on like first we place 100, then if it gets filled, then we place another 100. You all are getting
Okay,
it?
it's like a loop. Like what
Yeah,
once the one price gets executed, then the another price that is set that gets executed. Like
yeah.
because
Or
if
you
you have
can,
constraints there.
do it on the same. Like suppose if I have a limit order on 100, right, and someone hits the
Yeah.
market,
Mm.
and all my orders get filled. So let's take an example. If no one else is in the market, so the next best ask would be on 101. Suppose
Mm.
the tick size is one. Okay.
Yeah.
So what instead I can do is then again place 100 orders on the 100 level, right? Right.
Yeah. Yeah.
On this basis, I can get my orders filled. Basically, that's how usually firms do. And
Yeah.
market
Yeah.
making is
Exactly.
a bit different from just getting your fills, right? It's like
Mm.
taking the advantage of bid ask spreads. Some assets and instruments are more liquid, some are not. What we try to do is like from this from not from this year but from the past 2 3 years, what Future First as a firm is trying to do is also trade the inefficient markets, because the majority of the benefits and profits are that come to the firms are from inefficient markets, because the information transfer is quite slow in such sort of markets, right?
Okay. Mm.
So like I'm not telling you to explore very low liquid markets, but what I'm telling you is some new markets or some niche markets also have a huge opportunity rather than trading something like Nifty Bank Nifty, because like Nifty Bank Nifty is still like on a upgrowing phase, like but for the markets like US Nasdaq and S&P, they are very mature markets, right? So
Mm.
these markets are considered to be very efficient. But rather on the another hand, when you are trading some markets like uh, when you consider even Indian markets, they are a bit inefficient than the US markets. So as you focus on inefficiency, you get like more results out of it. That's how it works.
Basically, leveraging out the inefficiency that we have.
Yeah. Basically, as a firm, what we try to do is trade the uh, error, basically differences. That's the point of
Okay.
it.
Mhm.
Yeah.
Cool. So a random question from my side to everyone.
Yeah.
All right. So why? I think you guys know the fee structure of most of the exchanges, right? I'm considering crypto exchanges out here. Okay. So you have two fees associated. One is maker and one is taker, right?
Yeah.
So if you guys know about it, why is the maker fee lower than the taker fee? This is my question. Since we are into hardcore market making, so let me expect the answer from someone.
Hey, can I speak?
Yeah, please, Krish.
So I guess there are multiple reasons. First is that maker provides liquidity to the markets,
Hmm.
and it helps in keeping the market prices stable, right? Buyers and sellers. And with more market makers, the market has a greater depth of orders at various price levels, which improves the overall trading experience as it is.
Right. Absolutely right.
Yeah.
Anyone else?
It increases the liquidity in the market.
Yeah, like you guys have basically told the same answer. So yeah, you are right, guys. Awesome. Second question: how to build a market making strategy for USDT INR? Let me actually type this down here. How to build a cool. So let me tell you the use case for this. So you know about it, right? You guys deposited INR in your wallet and you bought USDT, right? So there is a need for most of the Indian crypto exchanges to have USDT INR market makers, right? So my first question is, what is the most challenging thing that exists in this space? And secondly, how do we build a strategy that resolves the same problem? Anyone, please go ahead. कोई बता सकता है? Any idea?
Hi, sir. Actually, I don't understood it completely, but I guess based on whatever we heard in this session, we have to take the opportunities in the price differences, right? Differences in the bid and ask prices.
Okay.
So we can consider that for making a strategy and define a perfect order size.
See, I'll tell you about this actually. So the major problem that comes when you are going for building a market making strategy in our crypto, like in our Indian crypto spot market, is you have to pay TDS, which is 1% of the transaction amount, right? So when it comes to market making, like agar aap basic buy sell kar rahe ho, so you need to pay that TDS thing, right? But when it comes to USDT INR, right, TDS charges 1%. But in very rare cases only we see a price difference of 1% within maybe 2 days, 3 days, or more. So how do we build something that resolves the same? And I'm telling you, if you build something around this, exchanges can pay you in huge amounts, in very huge amount. Do you guys understand my question? What I asked you right now? The problem here is TDS. And how do we resolve it and actually build a market making strategy? Anyways, you guys can think upon it later, take it as an assignment, right? Research on the internet, and yeah, Harsh, you can proceed from here. I'm sorry. Yeah.
No, it's fine. It's fine, right? You were
Yeah.
almost saying about the same thing that we as a from firm do. So what we majorly do is, because the number of traders here are like uh, almost in a good numbers, I can say, and the amount that we trade is huge, like literally huge. Sometimes when we place orders, we actually move the markets like with large amount of ticks. Like for an example, in the past, like past month, right? One of our traders actually liquidated his positions for some reasons, and the platinum markets actually, something that moves in the range of 5 to 10 ticks actually moved 30 to 40 ticks, something of that sort, right?
Great.
So what actually, because we have a huge number of volume, actually, let me tell you, we also like the Brazil strs. You know what strs are? Strs are short term interest rates, basically that comes from debt markets, bond markets. So we also comprises of 30 to 40%. We provide actually 30 to 40% liquidity in the Brazil markets. Just the future first brand. Yeah, the whole future first. So what happens when you are also market making and also trading strategies? You are basically trading your own strategy, but because you are trading it in such a high volume, the exchange provides you with the rebates, basically. And just based on rebates, I know a lot of people who are making a good amount of money, right? It's okay,
Yeah.
fine, it's fine, Himanshu. So just based on that rebates, there are some people who are earning a good amount of volume. Like I know a person, she was like she's a senior. Right now she has moved to Dubai because of some, now tax reforms.
Yeah.
India charges huge on these taxes, and she makes around like a good amount. I cannot say how much, but yeah, she makes a good amount, and she has recently moved to Dubai. For we Future First also has a branch in Dubai, so there are no taxes, so like you earn a bit more there, 30% more basically. So this is some sort of thing like market making is something with which most retailers don't know about, and is actually a huge opportunity. uh, yeah. So
Absolutely.
yeah, Vishal, anything else?
Yeah, that's great actually. Now, I guess we are done from the side of algo market making and how.
Yeah, let me also tell you about execution. So
Yeah.
you all must be having some strategies, right? That you deploy in the markets frequently based on price action or whatever you are doing. So when you actually use algorithms to execute it, first of all, there is no your personal bias. Like if you have designed a system and you have designed it such that you have to take a long year. So when you do it discretionally, you also have a some sort of like foremost sort of thing. Basically, you are removing your biases when you are using an algorithm to execute it, and also you are reducing your like slippages mostly. It actually, when the trading signal is generated, at that exact time the algorithm actually push that orders into the broker or whatever trading software that you are using. That's the point. And what mostly retailers do is they see some of like this sort of thing also happened for me when I was trading the Indian markets. Like sometimes I was looking at just the candle high cross, or sometimes I used to trade like closing of a particular candlestick. Okay, but you actually have to define it. Like if you trade on just the closing of the candle, you have to trade based on the just the closing. And when you are trading just the crossover, doesn't matter if it closes or not, then you have to trade on that. So at that time you shouldn't wait for the close of the candle, right? These sort of things comes into discretionary decision making, and that sort of thing the algorithms put it away. So uh, when you are doing like, some of y'all must be like interested in getting into such sort of firms, right? Like Future First or whatever prop trading or your dream firms are. If you don't want to get into firm like trading, yeah, on the solo is also okay. But what I'm trying to say is using an algorithm to execute your trading strategy is far more better than using like just placing order manually. That's what I'm trying to say. Okay.
Yeah. Cool, cool, cool. Great. That's actually some great insights regarding the uh, industry, right?
Yep. Yep. In the Future First too, right? Although some traders trade discretionally, but the execution of it is almost every time algorithm based. Whenever we put a order, like we have our execution systems that we use that are using algorithms to like properly space the orders, properly define the number of lots, at what lots should be placed at what levels. Okay, these are this sort of things like execution is properly managed through algos. And that's like recently, you all know that Fed cut the 50 basis point cut.
Yeah, yeah, yeah. We
Yeah,
did actually have a live trade
yeah.
at that
So
point of.
what happened was earlier, what our firm like the information transfer in this game, like I'm not going into HFT side, but what happens is I'm telling you the benefits of algos. What usually happens is the information, like you all know, okay, you Reuters, you all must be knowing or not, I don't know, but Bloomberg is something I guess you all should know. Bloomberg is like the biggest information delivery and trusted site. So what earlier used to happen was there was a 7-second delay, okay, in delivering the news, whatever the Fed has cut or not. And just recently, actually, there are servers, just the Future First servers that are situated just right around the servers of the markets, right? Because of that, the latency has reduced greatly, like into milliseconds. And just because of that, we have like we as a firm has made a like good amount of money, good like in millions, because of just that fast. Uh, like in that algorithm, what we do is, suppose that bond market is like that. If some like if 25 basis point comes rate cut, or 50 basis point rate cut comes, then the price at which the a particular entity or security is trading should also come down by a particular percentage, right? 50 basis point or something, that is already defined. So what happens is, we have already given conditions like, if the this rate come like this, like 25 basis point, then do this. And if an rate cut comes like 50%, then do this. And this is all situated right, properly algorithmic based. And because of that, we managed to do on a good amount of money in the recent rate cut. Although I'm not trading the debt markets, but I know traders who are, so I know about them. So I'm telling you is, uh, try to do execution based on some system, and also try to improve your um execution, like Kite also, Zerodha also. And I don't know about much about, I guess Vishal must know that, if you are trying to do algorithmic based trading in brokers like whatever, coin switch or this, how to execute it, you can ask him. And if you are having any doubts regarding how to build, then yeah, API trading, but you need some sort of softwares, or like if the broker is providing you a API key for trading directly, then it's good. But if it doesn't, then you have to do it like through some software, right?
Yeah, so more on that. When it comes to coin switch, we are having API ready for the spot market. All right, so we are actually looking for a lot of algorithmic traders who have the strategies built on the spot market, right? And we can directly onboard them as creators on our platform. That's the first thing. Second thing is, we are getting our derivatives or the USDT futures API ready within a span of next 1 or 1.5 months, and that should also be helpful for those who look forward to a higher frequency trading as compared to spot, right? Cool. Yeah, Harsh, you can go ahead.
Yep. So I guess you all must know the importance of algorithm and the execution. Like if you are not using algorithms to decide the entry and exits, at least use it to execute it. Okay. Like not for the ideation part, for the execution part.
Great. Awesome.
Okay. Apart from that, like if you want to become a good trader, you all know like risk management is the first thing that you should do. Like it doesn't matter your trade wins or loses, but you should know when you are losing, how much you are losing. And like in very bad markets, it might happen that you are on a losing streak, like 3 4 5 6, doesn't matter. Like, but if you are manage your risk, then you happen to stay in the markets. And most of the people who make money in the markets, like some traders who I know are making like in seven figures in dollars, right? $1 million. They are in the industry for a long time, like 10 15 years. So they have an experience, they have an edge. Okay. So they all know the risk management path. When you stay in the market, you learn. Okay. So the first most part is staying in the market. And if you don't manage your risk properly, you are about to be blown out, right? Some of you all, I'm sure, must have blown their account once or twice, or at least more. So
How many of you actually have loaned their accounts? Cool.
yeah, like I won't say that's a part of game, that cause that shouldn't be okay. But you should be managing your risk. Like whatever system you are trading, whatever uh, trading strategy that you have, you should know if you are losing, then how much you are losing, and when you are hurting your stops. First of all, you should always have a hard stop. Okay. If you're not putting your, okay, let me explain what a hard stop is. some of y'all must be doing some sort of like trailing thing, trailing stop loss thing, but uh like waiting for a swing to break or some sort of that thing. Like, so instead of that, you should always have a hard stop. Like, you can't afford to lose more money than that. And also the allocation of money in a particular trade should be a part of your the sizing, position sizing, basically I'm trying to say. Yep.
Great, great, great. So yeah, lots of great insights from Harsh. Right. So guys, it's time for you to have your doubts cleared. So
Yep.
everyone who are having questions on their mind, please clear from
Yep.
Harsh.
Go ahead. Yeah. And feel free to ask, okay? Because I am also just a year in this like proper firm, so you can ask me anything, everything. Most of us must be of the more or less same age, right?
Yeah, actually yes.
Plus 5 minus 5 HD maximum.
Cool. So guys, yeah, please get your doubts cleared. You can use the chat. You can turn on your mic. I think Krish is saying something in chat. Harsh. Like rate
Okay,
cuts.
what? Uh,
Yeah.
so, what are you trying to say, Krish? Like, you are trying to say what was expected didn't happen when the rate cuts were announced. Like, what usually the trend is if the Fed announces rate cuts, the general tendency is the market should go up, right? Any market, crypto market, beat crypto market, Indian equities, gold market, whatever that is. When the Fed rate cuts rate, so the liquidity goes from the banks to mostly other asset classes. And during such sort of things, what happens is markets go up. But what did happen was like it went down that day, right? When the Feds actually announced that news. So you are trying to know what was the reason behind it?
Reason is pretty simple, I believe. Everyone expected the rate cut, right?
Yeah,
So
yeah. Actually, that's the reason. Like,
yeah,
people who are actually trading, it's like buying the news and selling the rumor, buying the rumor and selling the news type of thing.
absolutely. Yeah.
Yeah, because the people who were expecting the rate cuts, it was almost factored in that the rate cuts will be there. Okay, but
Hmm.
what was not sure was how much, like 25 basis point or 50 basis point. So it was actually already factored in that the markets were expecting that the rate cuts will be announced. So people had already built their position 1 week or 2 weeks before that FOMC meet. Okay, so when the FOMC meet were announced, the markets were already going higher. Like for the past 1 2 weeks, you could see that the markets were going higher. I don't know much about the rest of the markets, but I can tell you about the Indian equities that they went up, right? Uh, for the when the FOMC was announced before that, 1 or 2 weeks. So what generally happens is when the FOMC news was out, the markets actually went down that day. But on the next day, because what happens are retailers, what they do is they try to trade the news. Okay, but you should be doing your analysis and expecting things before the news comes out. Okay, based on database. Like, uh, uh, I'm won't be able to tell you now like what sort of things people use to analyze it, but like for a just like US payrolls, what are US payrolls, how was job data? Based on this, you can actually take a guess based on CPI inflation. You can take a guess like
Yeah,
how much rate cuts
I
or
guess Bloomberg terminals have all these data, and that is where
yeah, yeah,
we all
yeah,
get to. Yeah.
yeah. Actually, yeah. So that was the reason that the market fell that day in Indian equities. And the on just like the last session, if you could take a look, the markets actually rallied quite a bit. One or two, I don't know how much, but yeah, more than 1%. Let me take a look.
Even
Yeah,
yesterday in Indian market, we saw a dip around 130. Like it was a
yeah,
massive. Even Sensex dropped around 1,200 points. I guess I don't remember
yeah,
the
yeah.
numbers, but
This
that
sort
Those
of shape,
movements are
liquidation going on around yesterday.
this
those
short
movements are pretty common in expiry days, right? Yeah, Harsh, sorry. You can go ahead.
Yeah, I am seeing this sort of things are actually quite common when a particular news or like this sort of news comes out, because people have already built a position into it, and on the outcome of the news, someone has to book the profit, right? Whoever built the position. So that sort of thing, you can say that's a profit booking kind of thing, because of the fundament, still on the fundamental viewpoint, although markets might look quite inflated, like uh, some people might say it's a bubble and all sort of things, but yeah, the fundamentally the things are still going well for the Indian markets. And as far as for the crypto also, I know some friends who actually trade in the markets that are also in the firm, right? They are also expecting a huge like spike. Matlab, it's not a trading advice, but what they are expecting is like the BTC and all these markets should also go up in the coming few times, particularly months, or yeah, that sort of thing.
Absolutely, yeah.
Hmm.
We also have Q4 coming up, so things can get aligned for bulls, right? Again,
Yep.
guys, just remember one thing: the biggest market movements or the highest amount of volatility doesn't come from fresh positions, and it rather comes from existing positions either getting closed or squared off or liquidated and so on,
Yep.
right? This is something that you need to keep in your mind and work based on that, right? We have a few liquidity hunt based strategies that we'll be working on, right? So yeah, hope that makes sense.
Yep.
Cool. So yeah, anyone else who is having any doubt to ask here, please go ahead. And if not, then we can wind up the session. First of all, thank you so much, Harsh, for giving your time, especially on a weekend. Yeah. So
Of course, right.
yeah.
It's the only day like we get off, Saturday and Sundays.
सॉरी
But
अभी
yeah, it
पहले
was nice. It was nice
उसका भी एक
meeting you.
घंटा खा लिया मैंने, कोई दिक्कत
ना
नहीं
ना ना, ऐसा कुछ नहीं है.
है
It
कोई
was
दिक्कत
good. Like talking about market is like it's my passion, right? So I can talk about it any day, anytime. So
नहीं.
yep.
Guys, drop a heart for Harsh in the chat, everyone,
No,
please,
no, it's
to appreciate his
fine. It's
efforts.
fine.
Great, 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 great. Thank you so much. Thank you.
So
सही है.
so great. It was nice taking a meet with you, talking to you all.
By the
And
way, if anyone wants to get in
yeah,
touch with Harsh, you can.
yeah.
He's
Actually,
available. Yeah, yeah. Harsh, बोलो, आप ही बोलो.
yeah,
सही है.
you can actually contact me through LinkedIn, or you can just contact Bishal, or maybe if he wants, like, yeah, Bishal, if someone wants to talk with me personally, then like you can message me. Okay.
Yeah.
Like on LinkedIn also you can connect through me and message anytime. I mostly message all the replies, all the messages. Ruja, wait. Yeah, just my LinkedIn is just my name and the firm. Like you can type my firm's name, Future First, and you will get me. Okay. You can connect to me anytime. Like whenever I am free, I'll get back to you.
Awesome, awesome, awesome.
Mm.
Great, great. So yeah, guys. So I believe that's it for today. We can call it a day, right?
Yep.
Lots of great insights. I have recorded the whole session, so we'll be uploading it to YouTube. And हाँ, हर्ष की भी थोड़ा मार्केटिंग हो जाएगी मस्त एकदम बढ़िया. हाँ. कोई नहीं. So yeah, so thank you so much यार. करते हैं
Mm.
बस.
Chalo. It was nice. Happy weekend to
Great,
everyone.
great, great. Thank you so much. Thank
Enjoy.
you.
Chalo.
Also, Vishal, do you have a session in the evening or?
Yeah, we will most probably. I'll update you shortly on the same, right? I have
Okay.
the time constraints on my end. ठीक है. तो कर लेंगे अगर हो पाए तो.
Okay.
Cool, man.
Chalo.
Cool.
Bye.
But bye bye, Harsh. Okay. Bye bye, everyone. Thank you so much.
Thank you, sir.